Welcome to this episode number 38 of Your Next Trade called Back to CPI. So on Wednesday, we're going to have the CPI in the US inflation. If you look at the most recent moves of the S&P on CPI day, actually S&P stocks have been doing pretty well. Looking forward, we're going to have the retail sales, we're going to have the FOMC meeting. So what has been very true over the last few weeks is the strength of the US dollar. Some questions about the US economy. Services are still doing very fine, but that's not true for the rest of the world. Manufacturing have been struggling. So the market is really looking for catalysts. The volumes have been pretty light. If you look at the bond market, something that we raised last weekend is we have seen many companies going for new issuance for on the bond market, which has pushed yields higher. So there is a bit of a crowding out, what we call a crowding out, which is when we have so much bonds going into the market, especially from the US Treasury. There is a phenomena when there is so much supply going into the market that the yields are going higher. Looking really strictly for the economy, the question is how the US consumer will be doing in the future. We know that the US consumer is making 70% of the GDP. We get the retail sales from this week. As I've been underlying over and over, I think going forward the US consumer will be struggling because he's running out of reserves, and you see as well some bankruptcy all along the US economies on the way up. So really looking back into CPI now, what about the year-to-date asset performance? The story is still the same, double digit for the US stocks, 16% for the S&P, 31% for the Nasdaq. Euro stocks, Europe has been coming down from its high, so now single digits to low double digit. Japan still up 25%, very strong, but I think it's interesting to go more into the week to date. So week to date, we had a bit of a risk off for this week, which is the opposite of the week before. So last weekend, we look at stocks where the S&P was up roughly 2%. So we gave back only 50%, half of it. So not much of the end of the world, but I think interestingly, there has been divergence between the different indexes in the US, where the Russell has been very weak for this week. So banks, regional banks have been some of the sectors that have been struggling, but overall stocks that have been weakish. US dollar still very strong, so there has been a run. Really, people are putting money back into the king dollar. We are at 107 for the euro dollar, 147 plus for the dollar yen. So strong dollar. So if you think about it, that is not necessarily that good for the US economy if the dollar is too strong in terms of export. So I'm pretty sure that we will start to see some headlines of, not FX adjusted, FX adjusted for some companies is not going to be that great. So something to keep an eye on. WTI, something that we flagged, the 85 level, we broke that level. We discussed, we underline and explain why is it so, because of the supply coming from Russia and the Saudis, which is making 1.3 million to 1.5 million barrels. So they will keep on cutting it until December. So you're going to have another 3 months of imbalance, which will make the market probably going higher. And copper weak, so that tells you about as well the US economy and the Chinese economy more that is struggling. What about the year-to-date industry performance? Picture is still the same. Some big winners. S&P is around here. So not many sectors are outperforming the S&P. Many sectors industry underperforming the S&P. So in other words, very few winners, and really the market has been driven by very few names, very few industries. Week to date, so the S&P is roughly here. So that is the S&P for the week. Many underperformers. We are talking healthcare, we are talking silver, but we know we are talking regional banks down almost 5%. I think what we're gonna see from this slide, which is more interesting on the week-to-date sector performance, is really some question about the U.S. economy. If you look at industrials, if you look at materials, we are talking cyclical. So for this week, market has been pushing lower anything that has been cyclical. So that's something to keep in mind, where on one hand we've seen some positives through the ISM services, but the market through the price action is telling you that actually the cycle might be really weakening. And I think that is something that I've been underlying as well, which is US economy is really traveling around 1 to 2% GDP, but the question is on Q4. What about the rates? So the rates 4.27% on the S&P, on the US Treasury. Why is it so? Again, a lot of supply coming every single week, so it's hard for the yields to go much lower if every single week you get companies coming back into the market, if you have the US Treasury putting a lot of paper. So these phenomena that have been that are raised 3 or 6 months ago, which is again many supply. If you get a US deficit that is running at 5% plus, if you get companies that needs to hold their or refinance their balance sheet, that puts the yields higher, and it's hard for the yields to go much lower. So 4.27%. The 10 versus the 2, minus 70 bips. Again, not much of a view here, but really for the 10 years, that is where I keep my eyes on. So last week we, for quite more than 2 minutes actually, we look at the Fed fund rates, we look at the FOMC expectations. So in 10 days time, we got the September meeting. It should be a non-contest, so the Fed is not going to do much. But really the question was going forward, what's going to happen? It feels now, 545 in November and December, so roughly a 50% chance that the Fed, so 545, sorry, I should explain, 545 versus 533, that makes 12 bips. So 12 bips, which is 0.12% versus 0.25%, this is roughly 50%. So market is pricing now a 50% chance that the Fed will hike rate between now and the end of the year. Okay, so that is a bit of a difference between the 30-40% that we had as of last week. And as well, if we look at something that we explained, if we look at going forward in 2024, now we expect the Fed to be cutting a bit less rates than before. So if you compare the 432 to the 451, that is 19 bips if I'm correct, and 90 bips means instead of expecting the Fed to cut rates by 100 bips or 1% next year, is going to be 75, 80 bips. So Fed less aggressive in cutting, so that has been coming mostly from the ISM services that has been very strong. My view is still the same. Q4 is going to be a struggle where really the US consumer will be struggling. VIX, looking at volatility, 4.6%, a bit of higher volatility. So something that I flagged last weekend, VIX was really low. Implied volatility was priced as a very low level. You don't have much of news coming for this volatility to go higher, and as we're going to see later, that has been explained from some China, Apple, and some other factors. I want to go now into the technical analysis. So we look at the S&P last weekend, obviously, and we look at two levels from the that I flagged from the JP Morgan color. And I should have mentioned that this color is at the end of the month, so after the expiry. So on this Friday, we got the option expiry. But if you look in terms of risk reward, so I've been, talking a lot through the Discord community about risk reward. When, people come and say, look, I've been making $20, let's say, on something that is at trading at 100. But if in the meantime this thing goes to 60, your risk reward has not been great. And I always think you should be doing the same with your risk reward. I know that some fancy people will tell you it's always a 3-to-1. On average, it's super hard to get a 3-to-1. So I'm thinking about that chart. That chart is a good example. If you look about that trend, you are right in the middle. So as a trader, if you're not into a position, that is a 50% risk reward. So that is not that great. But coming back to the color, so we got the 46.65, we got the 42.10, so that's similar, a bit of in between. So the market is really struggling for direction. If you look at the Nasdaq, that's the same. If you look at the Russell, actually something that we discussed over and over, this is really the index that is struggling versus the other ones. And if we look at the Nasdaq versus the Russell, we have been making new highs, not because the Nasdaq is strong, but really because the Russell has been struggling. The FANG versus the rest of the world versus the S&P, consolidating, so not much. We don't have that much of a direction. Apple, I've been discussing that. I've been flagging that we were getting closer to the gap that was open during the earnings. We roughly went 50 bips close to that, and since then we have been coming down, something that we will discuss a bit later. I'm interested into NVIDIA. Why? Because we get the IPO of ARM that will be on Thursday. So SoftBank is going to be placing some paper, and obviously this is semiconductor. NVIDIA has been trading into a trading range, you see, at 450, 500. So a lot of noise, a lot of volatility, but the price action is actually not that great. I mean, it's great if you look at, obviously, people will come and say, look, Greg, since January is up 300%. I'm not saying about, the last 6 months. I'm talking about the last months. Bit of looking for direction now. So JP Morgan, I think this is one of the stocks that you should be looking at, especially if we go closer to the 141. That is a good tell about the US economy overall. And as you can see, since the earnings, this stock has been down by 10%. So really, those kind of stocks, really the leaders, those are the ones that you should be targeting. Euro dollar trend is still the same, down. I think the dollar is really strong. The trend is still the same. I don't think that the Fed actually don't want a dollar very strong. So something to watch for. And finally, two things. Looking at the CL1. So that will be for the WTI. So we see the breakout that we had since the beginning of the year, and that leads into XLE that we discussed. XLE above the interesting, important level. So we need to see if there's going to be a follow-up on the XLE, because this is obviously a sector that has been doing pretty strongly. And finally, copper looking for direction, but price action is not great. So going back into what happened for the week. So this is, as always, starting with the S&P. As I said before, we gave back 50% of what we managed to do the week before. So we are roughly down 1.5% for the week. Actually what was bad news, which translated into good news for the market the week before. For this week we had okay, and actually not okay, and better ISM services in the US, which leads into good news is bad news. But actually, if you look at the ISM services versus the PMI services, there has been a divergence. So PMI services is not telling you that it is a great number. We are roughly around 50.5%. So, and going lower, and if you look at the global services PMI, which is here, which is for the entire world, we are now at 51.1%, and this is the lowest since January. So really services overall are starting to catch up with the with the manufacturing. So PMI services a bit late so far. I think the trend is still the same. We're gonna have as well for the week for the headline for the moves and that's been triggering some moves on the S&P is the Apple China exposure. So something that I think as a trader for ID generation always look at the sales per region. So when we look at the stocks, we look at two things. We look at sales per businesses and sales per regions. And one way to generate ideas is if you have a view on a region or if you see a news on a region, making sure that very quickly you can have access of the companies that have exposure to those regions. It is very clear that for the China story, it's about semiconductors, but it has been as well around Apple. And Apple's got roughly 18 to 20% exposure to China, and we are talking revenues. So that was true in 2022, 19.5%. And when we started to have news of the Chinese government asking, people not to bring iPhone at work, the stock didn't like it. So on one hand, for Apple, we get like bad earnings. We had they are firing up on all cylinders their buyback program. So, but I think it has been very active, as I flagged 10 days ago. But now this news has been pretty bad, and that has been leading in the stock going lower. WTI higher, so that's the breakout of the 85 levels. China is still struggling. The headlines are still pretty bad. I think the GDP is going to be below 5%, that is for sure. So as I said, Fed expectations changing a bit, just roughly, but I think it's more a question of poor liquidity. And interestingly, in Europe, we got the Bank of Poland cutting aggressively rates, which was not expected, both in terms of magnitude and in terms of timing. So we got elections coming in Poland, so there is a bit of question of is it political or not, but that tells you that at least some central banks are changing and flipping, and the hiking cycle is over. So something to keep in mind for the near future. For the catalyst going forward, so this is, we have been looking at what has been happening, but this is pure ID generation. So for this catalyst, looking for this week, we get some big data. We get the CPI on Wednesday. So if you look recently here, so this is the euro move on the ECB, which is going to be here, the red decision. Why? Because we get the the ECB, it's a bit of 40% expectation that they're going to raise by 25 bps. But what you can see is if you are an FX trader, there's been a lot of volatility recently around the ECB day. And most of the time, actually, the euro has been struggling on that day. So CPI, PPI as well, retail sales, very important. I think the retail sales, and probably it's going to be the other way around, retail sales might be okay. I think retail sales so far have been pretty good. We know about the big effect of the big concert, the cinemas. So we are talking Beyonce, we are talking Swift, which have been helping a lot during the summer. The US consumer, I think going forward, I'm really struggling to see some good catalysts for the US consumer. China on Friday, Chinese PBOC meeting, we got the industrial production and the retail sales. So many data coming from Wednesday onwards. Similarly, looking at the Fed, we don't have any Fed talkers for this week, as this is the blackout period, so not much of a catalyst on that end. Apple new iPhone, so that's the big meeting on Monday. We get the ARM IPO that we discussed last weekend, so this is important in terms of catalyst and one of the sectors that have been doing pretty well, which is the semiconductors. I think the market is still waiting. It's mostly about passive investment. I'm monitoring passive investment in Europe and in the US, and the numbers are more or less the same from one day to another. So market is driven by two things for the time being, passive and options. So far, active has been very, very quiet. So on Friday, big day for those who are trading option expiry and index rebalancing. So we get two names going in the S&P, two names going out of the S&P. Same in Europe, where you do have a bit of index rebalancing. Option expiry, you're gonna see huge volume on the day. Don't be surprised. This is really similar as always. We get the G20 summit this weekend in India, so maybe a bit of headlines. Finally, S&P weekly straddle 1.3%, so implied volatility is still very low, not much of expectation. So market is struggling for catalysts. It's kind of waiting for what's going to be the next big news on the macro side. And finally, as always, I try to identify the leaders. So this is for here. This is this graph where I put the obesity, diabetes stocks. So we are talking Eli Lilly, Novo Nordisk, which are really strong. We have been very, very strong. So it feels like our society, economy is going into this topic only, which is having a lot of eating, consuming, and in the meantime using product to be able to not to be too fat. But you see those names, and I wanted to flag those names because as long as this Eli Lilly, Novo Nordisk is going up and up and up, it's passive investment is all those names. So you want to be looking at those names to see if there is a bit of a turn. For instance, Eli Lilly has been very, very strong every single day. So it's up, if we look since the start of 2021, stock is up 250%, same as Novo Nordisk roughly, and same as Nvidia. So I wanted to compare those names with obviously a name that is making the headline, which is Nvidia, and it's massively outperforming the indexes. So this is for the catalyst going forward. This is for UID generation, so a bit of FX, a bit of macro to the CPI, the PPI, a bit of exposure, sales per region, and as well looking at leaders versus the pack. So this is it for me today. 4x4 video series if you are interested. So this is the way we generate ideas. This is the way we do things when we do the mentoring. We look at the macro, we look at special situation, and we look at the leaders, we look at technical analysis. This is the way as a professional how to generate ideas. You could be joining us on the trading community. There are some free channels. There are some channels that are for the people who subscribe to the 4x4 who have been doing mentoring. For those of you who have done the 4x4 video series, in 3 weeks time we're gonna have a free group mentoring session. So as long as you send me an ID before the call, you will have access to that call, and we will go probably around 60 to 90 minutes through something like a normal mentoring session. So this is it for me today. Busy week from Wednesday onwards, and I'll see you next week. All the best. Bye bye.